Ladies and gentlemen, China's getting destroyed. Nvidia's up again. Cats and dogs are playing together. So, of course, we have to bring the gang together to figure out what is going on in this market. So, again, guys, welcome. This is the third episode of our little fun Braintrust conversation with Derrick Oldensmith from T3 Trading Group, JR Romero from the Momentum Express VTF, and Sami Abusaad from Strategic Day Trader and Strategic Swing Trader newsletters. How's everybody doing today? How's everybody loving or hating this market?
Loving it. I'm absolutely loving it. The China trade, it just gave us so much to focus on while we're waiting for earnings season to get started that there's just been a lot of opportunity here, and we've really been on the right side of those trades, and things are moving right now even as we're talking. I'm trading.
Okay, Sami, how are you doing today?
Doing great. I called two trades. Both of them were multiple R's, like 5 R's. One of them was the yen at the open. The other one was the mints, MNTS. So 2 trades, 2 like home run plays. Perfect.
All right. How about you, JR? How are you doing today?
You know me, Michael. I'm always loving it.
Okay. JR is loving it as always. Okay, guys, let us know in the chat where you are listening in from. So today's program, we're going to talk the big question, is China done? We're going to play 2 truths and a lie. Derrick is undefeated this season, so we're going to see if somebody can take his crown. Then we're going to talk about Nvidia, the big topic, current market outlook, and our favorite names right now. So Derrick, I will lead with you since you are the undisputed champion. Okay, so last week, all 3 of you guys said China might be topping out in the short term. So China came out disappointed on the stimulus measures. So Derrick, do you think China is done for now?
No, I don't think it's done, and it's still up significantly from when this entire stimulus started, a few weeks back now. It just got really ahead of itself. I mean, this is how markets work. This is how charts work. They extend and then they correct. So we had a massive extension period last week and the beginning of this week. And, I'm a China bull, but it was an opportunity to come in actually on the other side to liquidate those longs and put the shorts on. And I had some shorts overnight into the gap down yesterday, which was a beautiful gift. I was looking potentially for the China names to move lower once they reopened on the on the mainland over there in China. But I wasn't expecting necessarily to have a 33% gap in yen in my favor. That was a much bigger move than expected. So everybody gets a little lucky sometimes. It was definitely, I think, part good decisions and part of a little bit of luck with the degree of the gap down. I was saying this to my team yesterday when it happened. I'm not really a believer in luck, but I'll blame sometimes a really big gain on getting lucky. But I will never, ever, ever blame a loss on being unlucky. If it's a loss, it's my fault. I made those decisions. But you have a short overnight and it gaps down 33% in your favor. That's a little fortunate. So no, I don't think it's done. And now that dip is the buyable dip. So I came in this morning. It sounds like Sami was doing a little bit of the same if he called out yen to his team. I was buying BABA this morning, JD this morning. I've now liquidated those positions. I also bought Tiger this morning. I still have a little bit of that position on, and I am going to continue to buy this dip into this like equilibrium zone on these daily charts as these things reset up. So this is exactly what I was looking for, not just to liquidate the shorts, but also to come in on the long side of the market to reestablish myself there.
Okay, Sami, how about you? So I'm going to mute myself in a second because we have a fire thing going on in our building right now. So, Sami, what do you think of the China trade with FXI and yen and all these other names kind of getting creamed?
Yeah, I think they're done for now. But in the longer term, I think this is a legitimate breakout. This was a legitimate breakout and probably has more to go. But for now, I think that China is done. Actually, speaking, I'm not saying it's done like it's going to crash. I just think that we're not going back up to the highs anytime soon. I have 2,000 shares of the yen in my personal account and 1,000 shares in my Roth IRA. So I'm not turning bearish here on China, but I don't think we're going back up to the highs anytime soon. But yeah, we'll see. It's a gamble right now because it's too volatile, up and down. You know, you could wake up and it's a big gap up, or wake up and it's big gap down. So this is not really where you make your living. But if you see an opportunity, you jump in and take advantage. But this is now it's become way too volatile, way too much luck involved, basically. So I don't like to be too involved, but I do have 3,000 shares of day in, basically.
I find Sammy's approach to retirement planning to be like kind of hilarious, because every time I talk to him, it's like he either has a ton of Tesla or now who has yin in a Roth IRA. That's one of the funniest things I've ever heard. Not funny in a bad, I would just say unusual. Okay, JR, let's go to you. What do you think of this whole China situation?
Technically, it's not in play. You had a major reversal signal bar and a follow-through day. You haven't even tested the daily 21 on it. And at best, if you're a China bull, you can hope for a reaccumulative base to form, and that's going to take a while. So for now, for me, it's not really in play.
Okay. All right. So guys, it is time to get a little competitive. It is time for the most popular part of the show. We might just throw out all the stock market stuff. That might just be a waste of time. Okay. So it is time for two truths and a lie. Derrick is the undefeated champion. He's won 2 weeks in a row. So again, guys, how this works, I'm going to make 3 statements and one of them is a lie. So everybody has to try to guess the lie. And again, as a reminder to everybody, no cheating, no looking anything up. We're on the honor system here. So you guys in the audience, we want you to participate too. Okay, so here we go. So which one of these is the lie? Oracle is a top 10 QQQ name this year. Number 2, CEG is a top 10 QQQ name this year. And number 3, SMCI is a top 10 QQQ name this year. So everybody type the number of the lie in the chat. And Derrick, JR, Sami, just say out loud whatever you think the answer is.
When you say top 10, meaning in terms of weight or
Yeah,
in terms of
year-to-date return?
3 is the lie. I was muted there for a second. I'm going with 3 is the lie.
I would have to agree. I mean, it's down a lot, isn't it? I don't know if when the SMCI what price it started at, but you know, I'd go with 3.
JR, your thoughts?
Give me a second. I'm pulling up the chart.
unless the CEG is not even part of the QQQ, then it's number 2. But Oracle is at all-time high. I'm assuming.
You're really thinking outside the box. You're looking for questions now. This isn't the Series 57.
There is, if I will say, if you think this is a trick question,
CEG
you are
is
correct.
probably not in the queues.
So, all right, JR, you need to.
All right, I'll go with the flow. I'll say 3.
Okay, the winner today is me. The house wins. Oracle's not even in the queues. Something
sucks.
Something I only learned last week. I only learned.
It's a Dow component, right?
How could the Oracle not be in the queues?
I don't know. It's not. It's in the S&P 500, but
it trades on the New York Stock Exchange. It doesn't trade on the NASDAQ. I'm just seeing that right now.
It's the house wins. So next week I am the champion. So this means there's gonna be all kinds of hell going on next week because the house is the champion. Derrick, you are still the champion year to date, but now for today the house wins. Okay, so we're gonna go on to everybody's favorite stock. Not everybody's. I will say there's one person on this call. It is not their favorite stock. So let's talk about Nvidia because it's up 10% this month. It's back in play. I can tell by Sammy's face he thinks I was lying on that whole thing, so I know he's going to double check as soon as he has it. Okay, so Derrick, you just talked about shorting it while we were on our little meeting before this call. You talked about you were shorting Nvidia, and you just covered some. So can you talk a little bit about what you're doing with Nvidia now?
Yeah, I shorted some right as we were going into our meeting here because so first of all, I had Nvidia on my short list for today anyway, but just because of the extension of the daily, I was hoping for a spike up to like 135 plus very early in the day to look for a signal to short. So again, that's a lot of how I trade. It's big picture down to small picture. I never got that spike, so I never took that trade. But now here, right as we were going into our roundtable or podcast or whatever we're calling it, I was just looking at the Qs absolutely on fire, spies and Qs absolutely on fire from 11 to 12 o'clock as we're going into this. I'm looking at the Qs kind of extending up right as we're beginning to talk. And I'm saying to myself, this extension here, I'd like to think that there's a pullback, but I actually don't want to short the Qs themselves for the pullback. What can I find that looks like it's trading a little bit weaker right now? Typed up the chart of Nvidia. Nvidia from 11 to 12 did not rally at all with the Qs or the spies. It actually looks like it stayed pretty heavy and stayed pretty weak. So it was kind of breaking through this 132.50 as a little bit of a spot on the 5-minute chart. Again, right as we were talking. So I kind of hit it down. Actually really started a little bit above the level, looking for the break off of the extension on the Qs. So I hit it down somewhat aggressively, covered the majority of that already since we've been chatting here as a group, as a team. But I'm keeping a decent little runner to see if this weakness gives some follow through, if the Qs pull back a little bit deeper, which is certainly an if at this point. But yeah, I'm shorted. I wouldn't necessarily call myself like a Nvidia bear or anything like that, but this thing could easily pull back on the daily chart to $127 and still be a healthy, big picture bullish stock. Just maybe a microcosm of what we were talking about with the Chinese stocks. It just got a little bit ahead of itself when you have a day 3 with some extension on the daily, and then it starts showing some relative weakness. So I hit the bid right as we were getting started, and I still have some on. So I'm also talking my book just for the compliance purposes and the listeners out there. I am in a position. I am short.
Okay. All right. So JR, let's move on to you. So we've been hearing a lot of positive things about Blackwell demand between Foxconn and Jensen Huang himself. Yeah, Nvidia seems like it might be having another magic moment. So what do you think of Nvidia here?
Well, we had a double catalyst on Nvidia yesterday. You had a massively bullish note from Morgan Stanley in the after hours Monday, and you had Nvidia AI Day. So, we coming into the open, we bought Nvidia with both hands, and our target was at day highs. We nailed the target by, I think, 2 pennies. I had 133.50. We sold it right into the highs there. And what I told the team was, you have those July 10 highs in Nvidia where you had a clear distribution top on a 3-legged move with a climax right into August 5th. And so you're going to have some overhead supply in this area naturally, and some trepidation by longs to buy it. But structurally speaking, okay, as long as Nvidia stays above the balance range, the top of value at 130.50. Okay, I'm gonna consider today's action as set up for a bullish recumulative type of pullback. That being said, you have to be really cautious just buying Nvidia blindly up here.
Okay, you said, how do you buy with both hands? Does that mean like clicking with both hands? Like, how does that work?
What's that?
You said you're buying with both hands. Does that mean like clicking with both hands? Okay.
You don't use 2 sets of keyboards? What's wrong with you?
We should try that. We should film you with trading with 2 keyboards at once, one in each hand. Okay, Sami, what do you think of Nvidia up here?
A few days ago, because Nvidia was doing a daily buy setup, actually on the weekend, I said, how can you be bearish on the market when Nvidia looks like this? And I showed the chart of Nvidia was doing a daily buy setup. And then 2 days ago, I said in the room, I think, mark my word, Nvidia is going to be the highest, the most valuable company in the world. It's going to overtake Microsoft. It's going to overtake Apple. I was thinking that Nvidia was way below Microsoft and Apple. So I looked it up, and it was already ahead of Microsoft and very close to catching Apple. So yeah, Nvidia looks really good in the longer term. Short term, like for today, maybe even for tomorrow, I can see how it would pull back because it did get extended. But Nvidia is not climactic. So I do think it's higher, and it's probably going to have another run up this quarter. So it's very, very bullish.
Okay. All right. So let's switch gears for a little bit. So we want to talk a little bit about developing confidence as a trader, because we get these questions about psychology all the time, especially from newer people. So I want to talk a little bit about how you can actually develop confidence to execute. So Derrick, I'll start with you. So one thing that seems tricky is that when you're starting to trade, and maybe you lose money along the way while you're getting going, and you sort of have like a negative first impression of trading. Like, what do you do to kind of build yourself up to make you think you can do it?
So you have to do your research before you get into this business, and you have to have an understanding of what the learning curve looks like and how trading itself even works. Trading is very, very difficult, especially when you're first getting started, because you don't know anything about anything yet. And the thing about trading, when you work in a game of probabilities, that inherently means that sometimes you're going to do all the right things and lose money, and sometimes you're going to do all the wrong things and make money. And that makes it even especially difficult for a new trader, because let's say it's your, I don't know, third ever day trading, and you do everything right and you lost money, and that's just because that's how the probability worked. Well, you just reinforce in your brain that those are all the wrong things to do. And the opposite can happen as well. So one is just to come in with the right mentality when you're getting started in the business. This is not some sort of get rich quick scheme. There's a very large, very long learning curve that you're going to have to work your way through in order to become successful. And you have to recognize your goal as a new trader is to develop your edge. It's to develop your game plans. It's to develop your strategies, and recognize that that's a process that's going to take minimum 6 months, absolute minimum 6 months to get confident with and to build that stuff out. And then from that point, I think it's really at that point that the real psychological issues actually start to come into play for a lot of people. The most frustrating thing for many traders that I speak to is when they actually feel like they've learned enough and they know the right things and they know how to make money, yet they still can't do it because, as soon as they see that there is a negative P&L on their screen, they start doing all the wrong things. Or as soon as they see that there's positive P&L on their screen, they, immediately liquidate all their positions. So I think that the biggest counter to bad trading psychology, and this also goes back to building confidence, is to develop really good game plans, and then to have the discipline to be able to follow those game plans consistently over time. So develop a game plan for every single trade that you get in, and let the results just be what they will be. Absorb that data, make small adjustments to those game plans based on what that data tells you, and that's how improvement comes along. And then, finally, the biggest boost to confidence, obviously, is just making money. And that can almost be dangerous in and of itself. We have a little expression that we use in my VTF sometimes, which we call being profit drunk, which is actually when you're doing so well, you're making so much money that you start trading very poorly because, and this has definitely happened to me, I'm on a streak, I'm doing really well, I'm making money. All of a sudden, I feel like I'm invincible. Like I'm Midas, everything I touch turns to gold. So I start getting sloppy. I will be a little bit looser with my decisions, or I'll be a little bit too greedy, or I won't follow the game plan as well. So it's a constant process, I think, of development throughout a trader's career to build confidence. But I think that just having one, appropriate expectations, and two, having a strong focus on game planning development and following those game plans is going to be the real key to countering most bad psychology that you will encounter as a trader over time.
Okay, JR, I'll toss it to you with a little bit of a twist. Like, do you think it's healthy if a trader comes in, let's say at the bottom of the market, and makes a ton of money? Do you think that's good or bad for their long-term development?
Well, first of all, I want to start going before Derrick, because we should let the dumber people go first. So that's my first comment there. No, just kidding. Obviously, Derrick said all the things I was thinking about, and he was right on point.
You just have to win one of the competitions first, and then we can we can get you to answer the questions first.
That's right. All right. I'm gonna Rambo up next time. Here's what I tell my traders. Okay, if you want to make lots of money quickly, okay, open up a hot dog stand or go into investment banking. All right, this is a multi-year ramp up. Human beings are not wired to run toward risk. They're not wired to maintain total behavioral, emotional, and cognitive homeostasis while losing money. Okay, we're wired to run as far and fast away from the fire and the predator and everything else as possible. And it takes a substantial amount of time to build that behavioral skill to the point where you can actually keep it together while seeing your P&L go red or green. And they're both equally perilous if you're not properly conditioned to that. It's a multi-year project for sure. I totally agree with Derrick on that. And what makes it even more challenging, I call this Plato's cave syndrome. I'm sure you guys know the Plato allegory about the cave, right? People spend their lives in the cave and they can't see the outside world. They only see shadows. And trading for novices is very much a similar endeavor, right? Sometimes you win when you take bad trades, and you lose when you make good trades. And you really are sort of stuck in this cave without understanding what a good trade looks like, and more importantly, what your edge is in the market. Okay, I have 3 different sort of mission tracks for my traders. One, and the least important of which is technical analysis. Okay, like they have to develop technical skills. The second and very, very important is risk and money management. You can't succeed in this business if you don't manage risk. And then finally, through time and effort and a ton of time before and after the market closes. And I tell my guys all the time, guys, you're going to make your bones as a trader, not during market hours, okay? But after the market closes, you're going to sift through the rubble of your days, and you're going to figure out what your edge in the market really looks like. And that's it. The number one mission of a novice trader is to find their edge in the market. And without that, it's very difficult to succeed. So to go back to your question, Michael, I think years like 2020 really actually ended up hurting a lot of traders. It created a lot of Dunning-Kruger syndrome, like a massive sort of mass Dunning-Kruger psychosis where everybody thought they were Peter Lynch or something. And in reality, it was just a very, very crowded market with retail traders. So money was plentiful and easy to make. Beginner's luck, I think, can be a great hampering effect to any novice trader.
Okay, Sami. So I've heard Sami's story a million times. How he turned like 15,000 into 50, and then lost 65,000. So now Sami's like a very rational, logical guy. So what made you say, I want to keep doing this?
You're hooked. I mean, you get the trading bug and you're hooked. It's like one of those door-to-door salesmen. Once they get their foot in the door, it's not coming out. So I got the trading bug, and also because I'm very driven as a person. Once I feel like I'm defeated, there's no way I'm just gonna keep going until I figure it out. So that's basically, that was my psychology at the time. Now, to comment a little bit more further on what Derrick and JR said, totally agree with everything they said. I think when you come into this business, the thing to do is to not have any expectations. Because this way, if you don't have any expectations and you come in with an open mind, a lot of people that come into this business, they have a lot of money, so they were already successful in their other career or whatever. So they think, well, I'm a doctor, I'm a PhD, I run a whole department. I'm a multimillionaire. So they think they can do it because they were already successful, and that's the first mistake. So you don't want to have any expectations. You don't want to think, oh, look at me. No, you want to come in with an open mind and just learn, like be open to learning. If you think you know, then you're not going to learn, obviously. So you want to come to the market with there's a great book that I read many years ago called Zen's Mind, or Zen Mind, Beginner's Mind. So you come with the market with a beginner's mentality. And then the other thing is, sure, sometimes it takes a while to get the hang of it, multi-year, 6 months, who knows for sure. As you know, Mike, James in the room, and my co-moderator in the room, James Young, he attended the mentorship with me in June of 2019. By October, I already brought him on as a moderator. By March of 2020, he already had his first $40,000 month. He shares his P&L on YouTube and his channel. Is an open book, and he never had a losing month ever since then. So people ask me all the time, how long will it take me? 3 months, 3 years? Who knows? It'll take you as long as it will take you. But if you give it your best, then you've given it your best. If you don't give it your best and it doesn't work out, then you will never know whether you actually could have made it in this business but didn't give it your best, or you could have, you will never find out, basically. So my suggestion is to always come in with an open mind, be very inquisitive, really wanting to learn, and then focus on the process, not the outcome. So you focus on what's under your control, not the outcome, especially in the beginning, because the outcome is usually not pretty in the beginning. You're not going to make money. And so you can't be thinking, oh, I'm not making money, it means I'm not making progress. No, you are. You're making progress in terms of, at a conceptual level, you're acquiring a lot of knowledge, but you don't have the skill set or the experience to apply that knowledge yet. So in the beginning, you cannot be focusing on the P&L, which is why we suggest trading very, very small size in the beginning, or paper trading. But really, in a commission-free environment, you don't need to paper trade. You could trade with 1 share and wouldn't cost you anything almost. But this way, you have some skin in the game. You get some, your emotions, you get the emotions involved. And then, of course, you want to approach it in a very rational, objective way. So meaning you really want to figure out what it is that you want to do. Do you want to day trade? Do you want to scalp? Do you want to hold positions overnight? What is it that suits you, suits your schedule, your personality? And then figure out a way to trade in a very rational, objective way that you can repeat, that you can repeat on day in and day out. So if you do all of this, then, and you have the determination and the perseverance and the mentality of never giving up, I don't see how you couldn't make it. I mean, I'm not promising anything, but because this doesn't require us to be smart or be mathematically oriented or be really good with computers or any of that stuff. All it requires is an open mind and, of course, love for the game, which drives, gives you that drive and determination. But also, so an open mind, but also some objectivities, being rational, objective, reasonable as a person. Are you reasonable? Or are you always shooting for the stars? It's not going to happen in trading. If you're reasonable, rational, and you have the drive, you're open to, you come to the market like a parachute, only functions when it's open. So then the sky's the limit, truly.
Okay, all right. So Sami, you brought up the question of share sizing. So I'm going to ask one follow-up question.
Please.
Okay, and we'll just throw it right back to you, Sami. So we find in all our VTFs, our customers are obsessed with trade sizing. It's one of the big. Everybody wants to know how big or how small to be in a trade. So for you, is there any difference when whether you're in 100 shares of Tesla or 1,000 shares? Is there any difference for you when you're trading? Like, can you separate the size from the pattern, let's say?
Yes and no. If you are share sized appropriately, then you don't care about your share size because that's not something on your mind. You know you share size the trade properly. But if you're undersized or oversized, it's always going to be part of the trade, something that's going to be on your mind. You said our subscribers are obsessed with share sizing, as they should be, because it's a huge, huge deal. A lot of my really, really good trades, I never made any money on them. Why? Because I picked the very bottom and the stock did exactly what I expected it to do, to shoot up double, triple, whatever. And I wasn't able to make money on it. Why? Because I was oversized, or as it more often happens, I added too soon to the position. And so when it corrected a little bit, I couldn't stick with it because I had too much size. So any drop and I'm already giving back or losing thousands and thousands of tens of thousands in some instances. So share sizing is incredibly important. I have a video on YouTube for those listening, if you want to look it up. I think it's called How to Share Size Properly, How to Share Size Every Trade Properly, or something like this. It goes into the details of how to actually share size every single trade. There is a formula called, and the formula is, for share sizing, it's share size equals risk amount, how much you want to risk per trade, divided by the stop size, which is the difference between the entry price minus the stop size. Now, I don't take out a calculator every time I want to, calculate my share size. I just have a little cheat sheet, a share sizing table that's actually taped to my monitor, and I can just look at it and figure out, based on the size of the stop, figure out exactly how many shares to buy or short. So again, highly recommend that video because it goes into the detail. And I learned all of this from Van Tharp, who wrote an amazing book called How to Trade Your Way to Financial Freedom. It's 400 and something pages long, very, very dry, very boring, but it teaches you how to share size. And it's one of the absolute most important things to learn. So our traders are obsessed with it, as they should be, for sure.
Okay. All right. So, JR, so we actually have an interesting question I'll toss to you from the crowd. So Larry's talking about how trade plan, it's simple to say, but often challenging to stick with it. Your keyboard is quite loud, JR.
Sorry, I had to close the short.
Okay. So how important is it to follow a trade plan to the letter? And should you follow a trade plan to the letter?
Yeah, yes and no. Look, this business requires unflinching discipline. The reason I'm saying yes and no is because if you're a discretionary trader, you're going to be, of course, more highly discretionary. The things that need to be ironclad are your rules in the market. So, just as an example, I'm not a systems trader. I'm highly discretionary in my approach, right? So for tier sizing or for risk management, right, I look at the technical risk and then expected value, right? So if I'm seeing a trade that's just absolutely obvious, like today we bought Tesla at the lows and it was, we're right at a major anchored VWAP, oversold condition, like a trade like that, I'll back up the truck on because I have really relatively low technical risk and the expected value on the trade is enormous. So I will graduate my tiers based on expected value and probability, right? So basically the more technically promising a trade looks, depending on market conditions and technicals, I will take more risk on. The problem that a lot of traders have is that, especially novice traders, is when they become a little too discretionary and with their trading plan, they tend to it tends to start to really affirm all their worst biases, and ends up becoming sort of a crutch for bad habits. So trading plan, incredibly important. You need to know your trading plan needs to outline your risk and money management plan, what you're going to be doing in the market. It needs to outline your habits and your edge in the markets, and then that needs to be pretty inviolable.
Okay. So, and Derrick, I'll go to you now. How much planning do you do versus improvising?
I do a lot of planning, even if there's a trade that's a little bit more improvised because I just see it in the moment and I hadn't prepared for it like pre-market or anything like that. I immediately have a game plan that's going to be around that trade. And then I'm a really big believer in sticking to that game plan. And then after the trade is over, you can reassess whether or not you applied the right game plan onto that trade and make adjustments over time. But the goal of being a trader is to be consistently profitable. So let's dissect that a little bit. The goal of being a trader is to be consistently profitable. Well, the only way that you can be a consistently profitable trader is if you are consistent in regards to your actions with the market. And the only way that you can be consistent with those actions is if you have rules that you have developed for yourself in any given trading scenario. And then your game plan is basically just the manifestation of those rules on how you implement your trade and your idea and how you execute and how you manage risk reward. So that's the only way that you can really be consistently profitable. We're discretionary traders, but that means that you're making your decisions based on the information that the market's providing to you through technicals and everything else and supply and demand. But then you have to be able to have these game plans in place because the market has a degree of a random factor to it. My goal as a trader is to try to take the randomness out of the market as much as possible by having consistency of approach through these game plans. So game plan development, I think, is one of the most important things in regards to trading. And sometimes, I'll talk to my team about this in real time. Sometimes I'm in a trade and I'm like, this trade sucks now. It just does not look right. This is not what my expectations were. Almost always, even after I think that, I will let the game plan play out, which can sometimes mean that I'll take a greater loss than otherwise. Like in that moment, the trade didn't look right to me. I could have just hit out right there and saved myself some money. I don't want to say 100% of the time, but I typically will still let the game plan play out, let it stop me out, even if it means losing a little bit more money, just for the sake of consistency. Because now when I turn back to trading psychology, which is such an important factor for most traders who have been trading for a while, the thing about trading psychology is if you're in the wrong headset, look, you show me almost any possible trade that anybody gets into, and if I try really hard, I can find one reason why that trade's going to fail. There might be 1,000 reasons why the trade's going to work, but I can find one reason why that trade is going to fail. Now, as a trader, when you're in that trade and something gets in your head, your P&L or whatever it is, you can become so hyper-focused on that one reason why that trade's going to fail that you miss the 1,000 reasons why that trade is going to succeed and why you even got in that trade to begin with. So if you just hit out every time you get nervous on a position and don't follow through in your game plan, you will never be able to be consistent in your approach, and therefore you will never be able to be a consistently profitable trader. So a big believer in game planning and, tier sizing, to circle back to that, is also something that you build into the game plan. And it's exactly what Sami's formula is. I tell people when they ask me about size is the last part of the equation. First of all, what is your trade? Why are you entering here? And where is your stop loss going to be? That's what I call space risk, the difference between your entry price and your stop loss. And then second question is, how much dollars do you want to risk on that trade? And then you back into how many shares you're supposed to take. If I want to risk $100 on this trade and it requires 10 cents worth of risk, I buy 1,000 shares. If I want to risk $100 on this trade and it requires $1 worth of risk, I buy 100 shares. That's all, again, built into the game plan. So love the question, Mike. It's one of the topics I get a little passionate about.
Okay. All right. So it is coming to the end here. So let's go around and everybody can discuss their near-term market outlook and your favorite names. So Derrick, actually, you lost the title. The house gained the title today. So I'll start with you, Sami. So Sami, quickly, what do you think of the market near term here, and what names do you like?
You muted.
Sorry. Yeah. Let me present just so that everybody has a watch list that I'm looking at real quick. The market, as I said in the video that I do every weekend, but this weekend I said, how can you be bearish on the market when it's basing almost at all-time high in the S&P 500? How can you objectively be bearish on it? So the market is bullish.
Yes, Sami. Do you want to share your screen, Sami?
Yeah. I'm working on it. Sorry about that. So the market is bullish, and I like it higher. In terms of some watches that I like a lot, here they are. Some of them already popped, like the cruise lines. That it's already gone. I talked about it in the room today, and the CCL is already gone. Those are some names that I really, really like that I think are good long term. The hood is one of my favorite ideas and positions based on the monthly chart. That looks amazing. I like the shop a lot. Believe it or not, ARC, I think, bottomed. I know it's not, it hasn't moved in a long, long time, but I believe ARC is bottoming. I have a call on it in the newsletter. ZM, we have a position in. Twilio, we have a position in. A swim hasn't triggered. Just a heads up, if you want to get into a play that actually hasn't even triggered, that I have a call on in the newsletter, it's swim on the monthly chart. That's a 1, 2, 3. UIS was another position that was another call that I made today in the newsletter. Triggered already. It's about 50 cents late, not too late. This one triggered a couple of days ago. Looks great. So those are some watches that I really like. Some of them are a little bit late, especially the cruise lines. Now, if you're not in, I don't know how to delete it. Here it is. That's too late. But these are some amazing watches. I think there's more, but that's a good number of plays to watch. Tesla, it's gonna do or die based on what happens with the robotaxi event tomorrow. It's setting up long, but it could also easily break that pivot. So if it breaks the pivot, you wouldn't want to be in it, but it could also be easily setting up to go higher. So Tesla is a little bit iffy. Everything else is good. The Pfizer already popped today, so that's a little late. Everything else is still not too late.
Okay. Thank you. Okay, so JR, how about you? What do you think of this market here, and what do you like or what do you hate?
Well, it's really hard to be bearish this market, as we keep saying. My next SPX target is over 6,000, we have to wait and see what the CPI jobless claims do, and then earnings season. But as uncomfortable as this market makes me sometimes, every dip gets being bought, and buyers are in control. As far as things I'm watching, we took Palo Alto long on Monday. Wait, am I sharing my screen? I'm not sharing my screen.
No, you're not.
Of course I'm not. Did you think I was? What's wrong with
You are a trained engineer, as well as a Jewish
Yes.
guy from Brooklyn. I assumed you would be able to share your screens.
All right, here we go. Look at that. Do I get paid extra for that? There we go. Devalidate parking. Okay, here we go. So Palo Alto, I think this is going to all-time highs. We took the declining top line break on Monday. Nice follow through volume, looking for 380 next. So I'm going over some trades that we already took, but I think have a tremendous amount of upside. MSTR, this is going to sound insane. I'm looking for 250, 254 at MSTR. We're already long MSTR. And then there's a few ones that really are catching my eye. Starbucks, I know, not particularly interesting, but you've got office distribution top here. You have a sharp reaccumulative consolidation here. Once you get through these large prior order liquidity level here, I'm expecting a move right through 110. So that one looks interesting to me. CCL on the weekly has a beautiful technical breakout through 1968. That is fantastic, and I'm expecting a full $7 to $8 measured move off the breakout level. Robinhood on the daily, this one's been fantastic. We've been all over this one. You have an inside bar breakout there, a 3-bar play, whatever you want to call it, through 25 and a quarter. It looks great. NTNX already started to go, but I think they're going to fill this gap into the about the 71 handle. We've got Chewy. The problem with Chewy is that it hasn't yet started to go volume wise, but I like Chewy back to 40. And what else do we have? APD. This is more of a longer term type of trending base breakout, but yeah, APD, Air Products and Chemicals. This thing has about $100 measured move in the making here. It looks great. So there's a lot of stuff to trade every day, intraday, and a lot of swings. Finally, my top pick of the week on Sunday was the tweezer bottom on Snowflake right here. This is it's almost technically a perfect tweezer bottom through 117 monthly breakout. We did a just ghetto up or attack on this bull wedge today for some continuation higher. The room is still long, and I think this is the big monthly breakout we've been waiting for on Snow. I know Derrick's been watching this one too, and I see this thing giving us a move to the 130s, mid 130s. Looks really good.
Was that a train whistle?
Yeah, I live on the wrong side of the tracks, Michael. Didn't you know? Why do you think we're called Momentum Express and not Momentum Restaurants or whatever?
That's a good question. Is this like the Outsiders? Are you a greaser?
Dude, I can seriously wave hello to the hobos in the morning. Okay, that's how close to the tracks I am.
Oh man, JR,
he's a harmonica, and we're good to go.
JR is truly a man of the people. He's with the common. That's why he's so down to earth. He's always with the common folks. Okay, all right, Derrick, we will close out with you. What do you think of this market here, and what do you like? What do you hate?
It's that Idaho lifestyle that JR is living in out there. So
Exactly.
love it, absolutely love it. Can't wait. You can't look at the chart of the SPY right now, especially after yesterday. I thought yesterday was like a big save for this market after the day before, which I thought was applying some downside pressure onto some support levels. You can't look at this market after yesterday, and then with today's follow through, SPY 570, 450. It was a big daily breakout spot that I've been looking at for the SPYs. We just broke out. How can you look at this chart and be bearish? You can't. Yet I still struggle personally right now to be a full-on bull in this market. I'm still a bit distrustful of this environment, really kind of through this October period, and then we'll see what happens one step at a time. But I feel like I will probably turn more bullish the closer we get into the end of the year. I just don't like some of the other information that I'm looking at in conjunction with this market breakout, like a $21 VIX. How come the VIX isn't at $14 right now when I'm looking at an SPY that has had zero volatility and is just going into a little bit of like an upside grind? So that is a concern to me. Positioning is a little bit of a concern to me as well, but position only matters, and I mean like institutional and systematic positioning, that only matters when you can actually trigger levels that begin to force liquidations, which certainly isn't going to happen when the market's breaking out to new all-time highs. So, go with the technicals, let the technicals be your guide. That's more important than any thesis or thought process. We do have some events coming up, such as the CPI tomorrow and the beginning of earnings season. So I would also just keep in the back of your head, even as the technicals look as bullish as they are right now, that there might be a couple things under the surface to be concerned about. And if you can actually trigger some downside levels because of an event like a CPI or whatever that causes the beginning of a sell-off at any point, I think here in the month of October, the real spot that I'm paying attention to for the moment is SPX 5600 on the downside. If you really can break through 5600, which we're pretty far away from right now, I think that that's the level right now where it'll cause a puking out of a lot of the positioning that's in this market right now and lead to a feedback cycle of selling. But it's I like to think about the markets in terms of if-then statements. If there is no catalyst that can bring the sell-off, if there's no catalyst that can trigger that level, then you don't get a feedback cycle of something that comes in. It's very possible that we can just sit up here and consolidate the way that we have, or continue to grind higher. And like I said in the beginning, and kind of reiterating a bit of what Sami and JR said, how can you look at this chart of the S&P and not be bullish on it or be bearish on it? It's impossible. But I'm trying to keep myself a little reserved here for these next few weeks, and I'm very mentally ready to pounce on any downside signal I get. And for people who know me well enough, they know that I actually tend to be an optimistic bull. So these kinds of warnings, if you want to call them, from me are relatively rare. But there's still some things under the surface I don't like right now. So for me, it's a two-way market. I'm trading both sides of the market. I'm doing a lot more in and out day trading than I oftentimes do. I typically do a lot more swing trading, and then I day trade around a core swing position for cash flow on a day-to-day basis. But lately, as I am more uncertain about the market, I'm doing a lot of going after the singles and doubles and smaller, quicker day trades to try to put some money in my pocket while I maintain both long and short swings at the same time, per predetermined game plans that I have. So yeah, that's where I'm at.
Okay, excellent. Okay, guys, that is going to close us out. This was our third episode. Let us know in the chat, should we come back for episode 4? Type yes or no down below. And if you're watching on YouTube, like, subscribe, leave a comment. You Twitter people, I don't know what's wrong with people on Twitter. The people on Twitter do not interact. It's very strange to me. We have the most people watching on Twitter. Twitter people never say hi. So I don't know what is wrong with them. I'm very disappointed with Twitter. Okay, so we're getting yeses. Our good friend Eddie from Momentum Express, Anastasia. We're getting yes, 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 yes. Excellent. Okay, guys, everybody have a wonderful day. Good luck this week. There's a lot going on with CPI, PPI, Tesla, AMD, blah, 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 blah. Thanks, everybody.